What's up, YouTube? Welcome back to the Crypto Junkie channel, where we talk about all things crypto. Today, what I wanted to share with you is the three most important things with trading. The three most important aspects, the three most important hacks, the three most important pieces, whatever you want to call it. Now, where this is coming from and what this is based on is me listening to New Market Wizards. There's three versions of this by Jack Schwagger, I think is how you pronounce it. He's got New Market Wizards, then the New Market Wizards, and then he's got a Market Wizards that is geared towards hedge funds. And collectively, what all of this is interviews of the most successful traders to ever live, is the simplest way I can put this. And so I've listened to those probably 5 to 10 times each one passively over the years, the last couple of years. And there was some things that I consistently noticed over and over and over again with these interviews, with the parts that he was able to share, etc. in these books. I listened to the audio tapes, which I would suggest you pick up if you haven't already, if you just really want to get yourself more into the mix, more into understanding how professional or successful traders think. So anyways, I wanted to distill down the most important lessons and the most important things that all those guys consistently talked about. Sound good? All right, and if you like this idea, if you like this, where we're going with this, then comment below, hit the like button, help us get up more in algos. So, three most important things, you're already seeing them on the screen. Here's what's funny about this. You should already know these things. You've already heard these things at least once. You've heard about proper risk management, having an edge. I talk about having an edge until I'm blue in the face. Having some sort of system. And so you've already heard these things before. But it's interesting, right? Because now if I were to line up 2, 3, 10 guys who all went from, let's say, 1,000, 10,000, whatever, to millions, if not billions of dollars that they've now made, and they were to say these things, how much more appealing would that be then to you? If I was on screen right now in a suit saying these things, how much more trustworthy would I be? How much more appealing would these things be that I'm talking about, right? So don't get it twisted on what we're about to talk about. Very, very important. So there's these three main drivers, and then there's a bunch of like sub pieces. Now with trading, with investing, it's just like fitness. It's 99% mental. Just like being in a relationship, it's 99% mental, right? So same thing applies here, but these three main pieces are what drives all of that. So let's go through them one by one. Number one, have a system. What does that mean? That means that we need to develop some sort of skill set by spending enough time in the market. This is, we're watching charts, we're understanding the macro aspects, like when the Fed hikes rates, when they cut rates, when stimulus is printed, when unemployment goes up, when it goes down. How are these things affecting the market, and which parts of the market are they affecting, right? Like usually when they were printing money during 2020 and 2021, it would make the dollar go up. When the dollar goes up, metals go down, risk assets go down, so equities would pull back. And then, Bitcoin, now that it mirrors the S&P so closely, it would also go down. There's a piece of data. There's a piece of alpha if you didn't already know that. So we need to be paying attention to that. And we need to be paying attention to what's happening within that specific asset. Like Bitcoin in and of itself, you could pay attention to for years before actually understanding what's going on, right? And so we have to develop some sort of system. That means that we've got some sort of process where we wake up in the morning, or whenever you're sitting down to do your kind of updates on your charts, on your technicals, your fundamental pieces. We need some sort of system then. So this system could be like a big macro system, and it can be down into the trenches of what are we looking for with like technical analysis pieces. What is our means of technical analysis? Are we doing some sort of wave analysis? Are we doing Bolkowski patterns? Are we doing, what are we doing? We've got a bunch of magical indicators, right? So down to like, what is our actual technical pieces that we're looking at within this system? So the system comes from spending enough time in the market and helps you develop what? Real skills. So that's the difference there. All right, that's number one. Number two, have an edge. You hear me say all the time, anytime I do a technical analysis video, I talk about the fact that we're looking for an edge. And if we don't have an edge, an advantage, a clear discernible advantage, which I riff on this in an entire video, it'll probably come after this, so I'll link it up in the cards after that's already uploaded. You can watch it. 20 minutes of me just talking about the importance of the word edge and the definition of edge and the meaning of it. In the New Market Wizard books, I literally think they said this thousands of times in each book. Every single person said this directly or indirectly, is that one, they had a system and they were in the markets long enough, and then something happened and they were able to see something because of the skills that they had acquired, that they could now position themselves to have a clear, discernible advantage. Remember, in this market, there are hundreds of millions of market participants. It is not going to be enough for you to just like throw MACD and RSI on a chart and just be like, oh, yeah, look, I see a head and shoulder pattern playing out. It's not enough, right? It's not enough for you to have an edge, right? So that is what I mean by an edge, is we're looking for some sort of advantage. And I would say to look in many different areas. We're looking for like, what is fundamental analysis lining up, news pieces lining up, what is market sentiment looking like, and then what are the technicals looking like, right? What is momentum looking like? What are all these oscillators looking like? Maybe some sort of patterning that we're doing on the chart itself, right? We're looking for those things, because now what we're starting to stack is like, okay, what is the market sentiment looking like? What is the news that is hitting right now, and upcoming news, like with Bitcoin right now? A head and shoulder pattern is playing out. We've got stablecoin DeFi regulation coming down the pipe, and like, so there's all this uncertainty. So that's stacking up towards what? More downside potential, right? And then we could look at other, technicals, like how much on-chain Bitcoin there is right now, how many wallets there are, right? Like what's being tied up, and those types of pieces. And we can stack all that together to give us an advantage. Yeah. Number 3 is proper risk model. This is the other thing that happens, is that most retail isn't around long enough because they blow up their account too soon by using too large of leverage. So 2 things are happening here. They're putting too much in each position. So let's say we have a $10,000 stack. They're going in, $1,000, $2,000, $5,000 every single trade, which isn't allowing them enough room for that position to breathe, right? And they're using too much leverage. So this means maybe they're going into, on the crypto side, Binance or somewhere that's allowing you 50x, 100x leverage. Why would you be using that? That's got your window so narrow. You're in a $1,000 window to be completely liquidated at 50x, and I think 100x is like a $500 window. Maybe that's changed based on the scaling of how Bitcoin moves now. But for the longest time, that's how that operated. And again, if you don't understand that, you don't really know. Like, you get yourself into a position and, oh my God, I'm actually $200 away from liquidation. Liquidation means you lose all your money. So understanding how risk works on the exchange you're using is absolutely crucial. We have to know, like, what is the percentage rate that algorithm works, right? So that we know where, to put our stop losses, etc. And that'd be the third thing, if I were to talk about it at all, is that, all these crypto traders, like, none of them are using stop losses. Why would you do that to yourself? We're losing 20% downside, 50% downside, 100% downside, but our upside isn't as good as the downside. So how are you ever going to make those gains back up? How are you ever going to, account for those losses by what you're staking up on the wins, right? Because here's what's happening: is people will hold on to losers way too long, and they'll cut winners way too short. So they'll cut winners way too quick and hold on to losers way too long. So how are we ever going to rebalance our portfolio? How are we ever going to actually be in profit if that's what we're doing, right? So we have to be analyzing these things. We have to come up with something like 1% per trade. And then what is our downside potential? What are we looking for from an RR standpoint? On TradingView, they've got that tool that allows you to measure out from a long position or a short position for your risk to reward. What are we looking for? Well, I would argue that you need at least a 3-to-1. But better, bigger is better. So if we're looking for a 3-to-1 trade, we're only, risking 1% per trade, right? We start to actually formulate a concept here. We always use a stop loss, right? And then if things change, then don't be afraid to cut a position. Don't be afraid to cut a trade. And these are all micro pieces that were discussed over and over and over again in the new Market Wizard tapes, let's call them. Okay, so now let's talk about these let's talk about these supplementing pieces. This is everything we just covered, right? We need to develop real skills over time by spending a certain amount of time in the market. You're not going to be able to catapult that. You're not going to be able to skip that. Training, some training can help you, but understand like going and spending thousands of dollars in courses when your portfolio is only $10,000 to invest, probably not a smart idea. Go to YouTube University and you'll be able to get a better idea of these concepts. But know what you're trying to study and what you're trying to understand before you go into it, because otherwise you'll just get massively lost in YouTube and the algorithms. And then before you know it, you're following, top 10 altcoins that are going to 1,000x this year that got 2 million views on it. There's no alpha in that. There's no edge in that, right? So understand what you're going to research and then go and try and find the best source for that, fast and cheap, right? Especially depending on what size portfolio you have. Discipline. Well, these are the mental pieces start to creep in. Discipline, focus, confidence, self-awareness, journaling. You got hot, cold spurts or streaks. Emotional check-ins, right? Like if we're losing too many times in a row, we need to be able to check in on that. And we wouldn't know that unless we were journaling or keeping track of our trading in some sort of capacity, right? Because when I'm hot, we should be trying to scale up in some sort of means. And when I'm cold, we should be scaling back with the amount of trades I'm taking, with the amount of time I'm spending charting, looking at charts. Take a break. So discipline, focus, confidence. Well, what needs to happen is as we gather little wins, micro wins, we need to remember that mentally so that we can tap back into that, right? Like who is it? David Goggins talks about the cookie jar, right? The cookie jar concept is like all these little wins that you put in this cookie jar and you can pull back from. So any huge win that you've got, 50%, 100% gains, these are massive wins. Even if you put $10 into the trade, it doesn't matter. It's the percentage ROI. It's the fact that you stuck to the trade all the way through, right? You followed your trade plan to the T. That is what makes it a win, not the financial piece that you got out of it, right? Like, what would you really make on that? So you turn $10 into 50. Okay, well, that's not super exciting, but it is from a fundamental standpoint. So we categorize those wins. And then when we have losses, we look at and we analyze what we did wrong. Did we not follow a trade plan? Did we go too large on leverage? Did we not follow our risk model, right? So it really does fall back on these basic building blocks. And what's crazy is that this is like billions of dollars of profit that has been made by traders talking about this, right? So yeah, discipline is we need to create a discipline where we sit down the same time every day or in the same way. We've got a same process that we follow, and we are putting in the work, right? Nowadays, everyone, and it's sad that it's actually worked for some people because it's massively changing the dynamic of like what people think is a way to profit. And so what's happening is because we've got all these people who are getting lucky, who held on to shit way too long, who did make profit off of things, that is now getting burned into people's brain as like, that's the way that you make money. That's the way you trade. It's not. It was just luck. Please understand that. It was just luck. Like getting lucky on those things is going to be very, very rare. As a whole, though, I would argue that being involved in crypto and getting crypto right is something that can massively change your life, right? And I don't think there's very many opportunities like that right now. That being said, it's like, don't let that now turn into like, that's the model to try and follow, because again, that was probably more just luck, right? Focus. We need to be focused while we're trading, while we're training, while we're paying attention to these things. We need to have focus. It's not that I'm looking at charts and listening to shit in the background. And if you're not used to doing like that and studying that way, then definitely don't do it. And then the confidence comes from us building up those little wins in our mind. It builds confidence. The more winning trades we've got in a row, it builds confidence, right? So these are all things that you need to be paying attention to and tracking in some sort of capacity. That's where self-awareness comes in, is we need to know when, okay, maybe I just broke up with my girlfriend or my boyfriend, right? Maybe you just had something big happen in your life. We all just were locked down for, 18 months, 2 years, whatever, right? Everyone's got now physical fitness issues that they're dealing with. They got mental issues that they're dealing with. So again, take all this into consideration while you're now trying to, strike it big in crypto or whatever you're doing, right? Like it is literally a formula for fucking disaster for most people. They don't know that though. If you were to sit them down, they would excuse their way out of it. No, you don't understand, Jay. It's this, it's that. No, I know exactly what's going on here. So self-awareness. And an easy way to get self-awareness is to pay attention to how you're behaving, and we can do that by writing it down, by journaling, yeah? Hot cold spurts, we already talked about that, and then emotional check-ins. Again, like if I start to notice that my emotional psyche is taking a shit and it's being reflected now in my trades and I'm trading poorly, do not revenge trade. That is by far the number one mistake that starts to happen as you get losses. You want to go bigger to make up for losses. So you go bigger and bigger and bigger, and then what starts to happen is you're just speeding up the time for when you go to zero. So you're literally just taking a quantum leap to losing your entire portfolio by trading like that. Revenge trading is the worst thing you could do. Ask any trader, and they'll tell you that the biggest mistakes they made was something in and around revenge trading. And this is especially true for crypto traders. I've seen this time and time again. They sustain a big loss and they want to make it all back in the next trade, so it gets them to do something completely stupid and irrational. They're not following the trade plan, they're not following the system, they're not following any of the things we just discussed. So that's what I got for you. The 3 most important lessons from New Market Wizards, whatever you want to call it, the 3 most important things in trading. I hope this video is valuable for you. I'd love to hear your thoughts in the comments below. Share this with people that you think it'll help. And again, be on the lookout. I've got that Edge Rant video coming out soon. Like this video, it'll just help get it in front of more people, help us with the algorithms. And subscribe if you're brand new here and you like this sort of thing. Be on the lookout. More videos coming soon.